You're undoubtedly wondering how you compare to the typical person in terms of money. Are you ahead or behind the average person in terms of finances? How do your earnings and spending compare to others? Some of the ordinary person's financial data will undoubtedly surprise you. In fact, these figures are likely to be quite eye-opening. Welcome to Cashflow Canvas, where we teach lessons about investment and money-saving techniques. If you want to make your financial future better, make sure to like this video and subscribe to our channel for the latest updates. According to the U.S. Census Bureau, housing accounts for approximately 34% of typical household spending. According to the Department of Labor statistics, rent is the most expensive item in almost every budget. In the current market, renters face rent increases and difficulty finding homes to rent, while homeowners face rising home prices, skyrocketing interest rates, and other issues, increasing costs such as insurance, taxes, utilities, and so on. These elements make renting and purchasing less inexpensive. Spending too much money in this one area might be harmful to your budget, making it difficult to pay for other bills. If a large portion of your money is immediately spent on putting a roof over your head, there isn't much left over for transportation charges, food and drink, and other requirements. It's nearly impossible to get ahead if this one expense consumes a large portion of your income. According to Bankrate, the average payment for a new car is $700 per month, and the average payment for a used car is $525 per month. These amounts may appear ridiculous, and they are for most budgets. However, most families do not spend this much on car payments alone. According to Penguin, the average family spends $819 per month on transportation, which is the second largest expenditure area after housing. Total monthly spending of over $819 per family isn't that out of reach considering this. It includes all transportation-related expenses such as gas, insurance, maintenance, car purchases, and so on. Unfortunately, many people are enticed by the idea of a brand new car and see it as a way to reward themselves. While this may make sense for some people, keep in mind that it will still spend the majority of its time parked. According to the National Association of Realtors, the average age of someone buying their first home reached an all-time high last year at 36 years old, up from 33 years old just a year prior. Even though there are loan programs available to help first-time homebuyers purchase a home with 5% down or less, this does not guarantee a home. In other costs previously mentioned, increased overall expenses. The average home price in 2022 was about $350,000. According to an article published by The Zebra, factoring in taxes, insurance, utilities, the cost of maintenance, and this could easily match. Even though homeownership costs are certainly on the rise, they are not the only thing rising. The average home size has been steadily rising over many decades, contributing to these higher prices, and home buyers are arguably fussier than ever before, with fewer and fewer buyers willing to settle for homes with single bathrooms, fewer bedrooms, and outdated kitchens. The average federal student loan debt is nearly $38,000 per borrower, while the average private student loan debt is nearly $55,000 per borrower. These numbers demonstrate that the average student loan debt has tripled since 2007, according to the website educationdata.org. $38,000 or $55,000 of debt may not appear to be much to secure a higher level of education, but this debt can be crippling for a new graduate when entering a career field with no experience. Entry-level pay doesn't get you very far, and think of all the other expenses a newly graduated adult is likely to incur in addition to these student loans that must be repaid. They are usually on their own, paying rent, and many of them decide to finance a newer car to replace the one they were driving through school. Many of these students did not consider the return on investment while selecting a major, and as a result, they are now forced to pay back in education with a wage that does not correspond. The average person in the United States pays $1,223 per month in debt payments, according to LendingTree. This figure includes car payments, credit cards for personal use, student debts, and even mortgage payments for homeowners. Those whose mortgage is included in this amount do not appear to be prohibitively expensive. Unfortunately, not everyone included in this survey owns a home. Just imagine bringing home your paycheck after taxes and being required to pay over $1,000 in debt payments and trying to pay your bills and save for your future with what's left over. According to banks and credit card companies, this debt makes it extremely difficult to save for future expenses, requiring you to borrow even more money when new expenses arise. Not to mention that consumers tend to overspend and buy things they don't need when given the option of paying for things over time. According to a 2019 study by Ladder and OnePoll, the average American spends about $1,500 per month on non-essential items, or $8,000 per year. This seems like a lot of money when you consider how many people are struggling, but they blame it entirely on outside factors rather than their spending. The figure includes dining out, subscription services, impulse purchases, and other items purchased that are completely unnecessary. It is important to reward yourself for hard work, and this is an important part of achieving a balance with money, but you should have your priorities in line. In other words, those who are spending $1,500 on non-essentials should first make sure they are not spending it on non-essentials. When you hear someone complaining about how broke they are and how they have no money, it makes you wonder if they're wasting $1,500 per month. Those reaching retirement age aren't getting there with millions saved. It's quite far from it, the median. According to the Federal Reserve, the average amount saved for retirement for those aged 55 to 64 was $134,000. Those aged 65 to 74 had $164,000 set aside for retirement on their own. These amounts saved will not go very far considering modern-day living expenses. If you use a 4% safe withdrawal rate, an egg will yield approximately $8,000 per year. The typical Social Security payment is approximately $1,550 per month. The Bureau of Labor Statistics reports that the median salary for people aged 20 to 24 is somewhat more than $30,000, while those aged 25 to 34 earn slightly less. The median household income increased to $50,000, and for those aged 35 to 44, the 45 to 54 age group saw a final increase to around $60,000 before it began to level off and slightly decline. These are comfortable earnings in states with high living costs and taxes. $50,000 or $60,000 will not go you very far, but in locations with a low cost of living and low taxes, this amount may be sufficient to live comfortably. Of course, whether or not you live by the sea makes a significant difference. By looking at these numbers, you can gain an understanding of the average person's situation, and you'll be able to make better decisions. As we conclude, I'd like to thank you for watching. I hope you found value in this video and learned something new, and I look forward to seeing you in our future videos. I would deeply value it if you could like this video and subscribe to our channel. Your support will help us to create more valuable content, and we can work together to secure your financial future. What are the key takeaways from this video that you can share in the comment section?